US sanctions on Iran, global output restrictions by Saudi-led efforts by OPEC have all partly contributed to the rise of global oil benchmark crude. 2 weeks ago, Brent crude breached $81 a barrel, its highest level since November 2014. My name is Oscar Rousseau. You're listening to the Construction Week Viewpoint podcast series, and I'm joined by Jack Ball, Construction Week senior reporter, to discuss how the rise in oil prices is going to impact, if at all, real estate development and construction across the Middle East. Jack, really good to have you here.
Oscar, thank you for having me once more.
So, Jack, it's been a roller coaster ride for oil for a number of years, but now $81 a barrel. There's, as one would expect, a kind of a palpable sense of excitement across the industry, wouldn't you say?
No, I think so, yeah. I think the past 4 years in particular, since 2014, oil has really gone kind of an up and down journey. And there's obviously a massive link between oil price and the kind of amount of funds that are, if you boil it down to the simplest sense, the amount of funds that are available for, governments in the Middle East to spend on, big projects here. And history has kind of shown a direct relationship between oil prices and the amount of money that's spent on projects.
Of course, and you look back to the crash when oil prices were around $20, $30 a barrel, and there was a real genuine concern in not just the Middle East but across the world about how governments that depend and countries that depend on petrodollars were going to not survive but fuel spending.
No, completely. And you look at the projects that are part of kind of macro projects that you're seeing in Saudi, for example, Vision 2030. A lot of that involves big infrastructure spending. For example, look at the Riyadh Metro. That is hugely underpinned by the amount of money that's available from the oil price.
Of course, again, the Haramain high-speed rail project, the first high-speed rail network in the Middle East, which recently opened back end of September as well. But of course, as well, generally kind of fewer contract awards are given in the backdrop of kind of falling oil prices. When you see tightening cash flow as organizations adjust their capital. And, that's the same with the government. It all trickles from the top down. But $81 a barrel now for oil. What does this mean?
Well, I think if you look at the data from over the past kind of 15 years, there was some data provided from a recent report. In 2002, for example, $9.7 billion of construction contracts were awarded in that year. And that increased to $126 billion US by 2008. And in that same period, that same kind of 6-year period, oil prices increased from 20 US to $100 per barrel. So you can see there's definitely that correlation there. And looking against the backdrop of real GDP growth in the GCC is also expected to improve this year by 2.2%, and that's from a contraction of 0.3% last year. And again, that's driven by a substantial increase in public spending against a backdrop of oil production, particularly in Saudi Arabia. So again, the oil price is so exponentially linked to GDP growth and vice versa.
Yeah, exactly. And I think generally higher oil prices this year have provided space for GCC companies and authorities to kind of maybe boost government spending potentially as well. But of course, that's just what's expected. According to an Arcadis 2018 report on global construction disputes, in August, it cited low oil prices continuing to foster a liquidity squeeze across the Middle East's construction sector, impacting supply chains up and down the Middle East.
No, exactly. I mean, if at its very lowest level, the big boys at the top who are the ones deciding how much money to spend on these projects, if they're not getting that input and that cash flow, then it's going to trickle down. It's really going to affect a lot of people in the market. And I think that report says it all, really. And I think our experience from talking to the market, does confirm that slightly.
Well, exactly, and that's the next point I wanted to come on and discuss with you, Jack, because we've seen the oil price, we've seen it rising. There's some talk in the industry that it's going to hit $100 per barrel again, which, I mean, that would be incredibly transformative for the Middle East again. But, maybe that may not be the case. But what are people in the market saying? You obviously spoke to, Mark Andrews when we in Construction Week interviewed him for his front cover feature earlier this year. What's he said about the rising oil prices?
So as you know, Mark is the managing director of Laing O'Rouke Middle East.
Of course.
And actually, he talked to Construction Week in 2016, and then I had the pleasure of interviewing him about a month back, a couple months back actually. And I asked him the question, in that preceding 2 years, what has the effect of oil price? What's that going to be, and what's that effect going to be on the construction sector in particular? Because he noted it in a 2016 interview, and he actually pointed to maybe oil price not having as bigger impact as it did 2 years ago. There's other things that are coming to the fore, and obviously there are liquidity issues more generally that contractors and developers are concerned about. But also you're looking at, he cited kind of growth post Expo 2020. And again, these things aren't really strictly related to oil price. Expo, for example, is not related to oil price, but the concerns about how to keep that hopeful economic growth in the build up to Expo continuing after that. So he did cite as oil price goes up, the region will benefit more generally, but considering everything else that's going on, in the world and the region, it's going to have less of an impact than it did 2 years ago.
And that's interesting. Sustaining that post-Expo growth is going to be really important, because we hear quite often, Jack, that a lot of the developers, certainly here in Dubai, are building lots of new developments, lots of new mixed-use community projects, in the expectation that, in the run-up to Expo, there's going to be this continued demand for housing. And you're absolutely right. There's a lot is pinned on Expo 2020, and ensuring that Dubai continues to grow and flourish after the event is going to be really important, and oil will just be one of the factors underpinning that growth.
Oscar, we both you and I and the team at construction, we were at Cityscape 2018, and I know you talked to a few people in market there who had a few opinion on it.
Yeah, of course. So I spoke to Samir Matadi, the Chief Executive Officer of Bloom Holding, the Abu Dhabi-based developer. And I spoke to him about a range of different topics. Of course, their Bloom District development, with their flagship mega project that's kind of going to break ground next year. But we also touched on oil prices as well. And he said, for sure, the rising oil price will have a positive effect on the budgets of the authorities, which will hopefully see kind of additional investment, whether that's in infrastructure or industry. So he said, yeah, the rising oil price can only be a positive thing. Mm-hmm. However, he did say one of the biggest unknowns was the sudden surprise of a $26 per barrel oil a couple of years ago. So at least he said now there's a bit more visibility on the price. And I think he said, now that we're above, anything above $60 a barrel is really good news for the industry. So now we're $20 above that. Really, really positive. And, touching on the comment he made about rising oil prices fueling the budgets of the authorities, we've already seen that kind of come to the fore. Look at the Tomorrow 21 initiative launched by Abu Dhabi, a 3-year economic stimulus package, which will pave the way for real estate projects, pave the way for infrastructure investment, upgrades to telecommunication networks as well. That's heavily underpinned by a more favourable outlook on crude prices.
No, absolutely. It's very easy sometimes, I think, to overhype the direction of the oil price. I think topping out at 100 may be quite optimistic, actually. I was talking to Bart Cornelissen, who is the managing partner at Deloitte, monitor Deloitte Middle East. And he was telling me that I think that he said the days of $100 a barrel are kind of behind us, actually. Not to say that's not positive that it's going up, but I'm saying that was kind of a historic high.
And there also needs to be a realistic outlook for the market as well.
Exactly. And in terms of, Bart was also talking about actual construction of oil and gas projects. So we're talking about rigs, we're talking about, fields, all that kind of stuff. And he said that we can't really expect to see an immediate hike in the amount of those kind of projects coming off the back of this recent, $81 price hit. Oil and gas projects, as a rule, they have to have a longer term horizon. Firms have to look at the viability of a project over an entire life cycle. We're talking about 10 to 20 years here. So a rise in oil price won't have an immediate impact on the size or number of oil and gas projects across the GCC. And there is often a time lag between any rise in oil prices and capital expenditure on these projects.
Of course, yeah.
Again, going back to you have to be realistic,
Yeah, exactly. But I mean, the other thing to look at is, take, for example, Bahrain, which made one of its biggest oil discoveries since may have been the 1930s, 1940s, earlier this year. And so you can imagine them going, wow, the oil price is really going up. We need to get the drills in the ground and start pumping away because, we need to tap into this value. But like you said, these projects have a long-term value. And going back to Samir's perspective, as long as it's over $60 per barrel, the industry's in pretty good shape.
No, absolutely. But I think we have to also be realistic. Once those sanctions from Iran bite, and once OPEC has reassured the market that there is enough supply and there's enough in its bank, so to speak, to cover any kind of restrictions that those sanctions will have. But as capital expenditure is slowly increasing, the trend for oil and gas projects tends to be towards the smaller projects. So the days of big bang mega oil and gas projects is kind of behind us. And again, that goes back to his point about the $100 a barrel days are also behind us, in his opinion.
Yeah, and also the final point I would make there is that you can really understand now why it was so important for countries such as Saudi Arabia and the UAE to press on quite admirably with economic diversification efforts, moving away from oil and the luxury of petrodollars and making the economies in their respective countries more robust and more resilient. So I think, you're absolutely right. We're moving away from the days of huge mega projects fueled by oil, but it's still positive times for the industry, and the Middle East will still be very much linked to the price of oils in terms of how well their economies perform.
Oh, completely. That's an inescapable fact. But it's also, as we look towards those diversification agendas, we might see that divergence maybe get a little bit bigger, but for the time being, it's going to stay pretty much aligned.
Yeah, exactly. Well, look, Jack, I think that's a really good point to end it on. It's clear that the rising oil price will have a positive effect on the economies of the Middle East, but of course, amid economic diversification, there's positivity all around the industry. So, Jack, thank you very much for your time.
Thank you, Oscar.
Yeah, well, you've been listening to the Construction Week Viewpoint podcast. We hope you've enjoyed listening to it. We upload new episodes every Monday at noon. Until then, thank you very much for listening, and goodbye.
Goodbye.